Today, we're going to talk about harmonic trading patterns. If you've watched any of my analysis videos in the past, you hear me all the time say A to B equals C to D pattern. I'm going to explain to you guys exactly what that pattern is today. Now, when we look for an A to B equals C to D pattern, it's very simple. You want to think about it like this. You get an impulse leg. Then from that point on, the market goes ahead and starts to retrace. Then from that point on, we get another extension up and out. And a lot of times you'll hear other traders talk about this as the lightning bolt pattern, as we can see right there. But there's a couple tools that we need to use to be able to quantify the A to B equals C to D pattern. Now, essentially what we're looking for is whatever the distance was in this first leg here, we expect the market can do that or a little bit more on the second leg up and out. However, there are some criteria that we need to pay attention to. One of the first tools that we need to use is the Fibonacci retracement tool. I'm doing this demonstration inside of TradingView, which you guys can get that platform for free. If you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, when you come over to TradingView, you want to grab the Fibonacci retracement tool. And let's think about this. If this is truly going to be an A to B equals C to D pattern, I want to talk about a couple rules first. The first one is, for me, we need to retrace at least to the 38% retracement, preferably somewhere around the 61.8. Now, I have the 78.6 fib level below here. If we go much past the 78.6, I simply will not qualify this as a trade. So in this instance, let's say that this leg right here came down like this, and then we got the leg up and out. In this case, I'm not really looking at this as an ABC pattern because the retracement was a little bit too deep for me. So I want to see that pattern, or I want to see that leg really terminating somewhere between the 61.8 and the 78.6. So in this example, we're going to drop it right at the 61.8 fib level. Now, what we expect, all right, and this is expectations, it does not guarantee price will make it there. But what we're expecting to see is the market to move up and out in equal distance. So however many points this leg was, we expect the market is going to do the same thing. So if I were to simply come over here and clone this leg and move it right over here, this would be where I would expect the ABC pattern to terminate roughly. Now, we can also grab what's called the Fibonacci extension tool. It looks like this right over here on TradingView. We can starting at the bottom, measure up to the upper swing point before we had the retracement back down. Then we project and look, we came right to the 100% level. Now there's two more key levels we want to focus on as well. Sometimes the market will run to the 127 extension as well as the 1.618. Now, the ABC pattern is oftentimes called the A to B equals C to D pattern, and I want to go ahead and explain the legs for you. Now, when we go ahead and we mark this pattern off on our chart, we can see the A to B leg is the first impulse move. The B to C leg is a corrective move, and the C to D leg is the final leg where we expect the pattern to terminate. Now let's talk about the Fibonacci retracement tool settings. We come right over here, click on the Fibonacci retracement. I just click from the low up here to the high. You can see we have a couple ratios. Now, if I click on this, we can come right over here to settings. And this is where you want to set the levels that you want to see. Now, the most important levels are going to be, you want the zero line so you know where you started, but the 38.2, the 50% level, the 61.8, and the 78.6. Now, out of the box, it's going to say 74.6 or 74.8, something along those lines. I use 78.6. Then we want to make sure we have the 100 level. We want to make sure that we have the 1.272 and the 1.618 levels. And that way you'll have the same exact levels that I see on my Fibonacci retracement tool. Now, when we come over and look at the Fibonacci extension tool, we click right up here and we go ahead and I'm just going to simply draw this out. And we're going to come over here and click over here and then click on settings. Now, once we're in settings, here are going to be the levels that you want to have on your Fibonacci extension tool. You want the zero line. You want the one line, meaning 1.00. You want 1.272. You want 2.0, and you want to make sure you have 1.618. These are going to be the critical levels if indeed you're going to be trading the A to B equals C to D harmonic pattern. I also want to make everybody aware, Apex is having a 71% sale off all their evaluation accounts and 50% off any reset fees. If you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, one thing to know, as we have the B to C leg for the corrective move, at that point, we do not know this is going to be an ABC pattern. The way that this pattern is confirmed is once price starts breaking above the B point. Now, there are multiple ways we can play this, right? One, since we already have the Fibonacci retracement tool placed up, we can look for reversal patterns anywhere between the 38% retracement and the 78.6, trying to get the full extension up and out. Or if you're a counter trend trader, once the move has terminated, we can look for reversal trades up and around that area. Now, let me show you a couple of ABC patterns in the recent analysis that I've done. If you guys have been watching my videos, which I drop each day the stock market is open, here's one that we've had played out on the 4-hour chart on the S&P futures. Here's the A to B leg. We get the B to C leg, and we project up here for D. We overshoot D by a little bit, not quite yet making it to the 127 extension. Well, if we pull our Fibonacci retracement and we measure from the swing low up here to the swing high, how far did the market retrace? Right here to roughly the 61.8 Fibonacci level. So could you have seen this as a potential bullish engulfing candle and try to go ahead and take the ride on up? You most certainly could. And in this situation, that would be a very favorable reward to risk ratio, because if you even got in at the break, the very tippy top of that candle, you can see that move was good for about 108 S&P points. Well, let's talk about the risk. All right. The risk could have been right here below this lowest candle of the last two candles, which would have had roughly a 30-point risk. So you could risk 30 and with an attempt to try to make roughly over 100 points on the trade, a massive, great reward to risk ratio. Now, also notice what we have right up here, right? Right around the 100% level. Do we have any bearish patterns? Well, we are now starting to form one now. Now, this candle has not yet closed, but again, we want to wait for some type of reversal pattern, some type of other reason to go ahead and take this trade lower. Now, as I'm sitting here currently recording this video, we're looking at the S&P futures on a daily chart. And notice what I've already had marked off in my analysis. We have the A to B leg, the B to C leg, and then we projected all the way up here for D. And look what we're starting to get. A little bit of a selling tail on top of this candle. Now, when we couple that with the fact that we also have MACD divergence, as we look at the MACD peaks, we can clearly see they are slanting to the downside. So what would I expect up and around this area? I would expect some type of pullback in the market. I would expect for the market to do something other than continue in that direction. However, when the market had this candle right here, this nice kind of reversal candle right here, we knew from this point on, there's a very high probability we're going to take out this level up here, meaning we're going to make it up towards that level even before we took out the B point. Now, just because we could theorize behind it does not mean it would be a valid pattern. So if indeed we were taking trades down and around this area, that would be basically front running the pattern before it is actually confirmed. Keep in mind, the pattern does not confirm until we take out the top of the B point. Now, also, if we measure the Fibonacci retracement of this move, we can see we came right down to where? The 61.8. Now, you're probably asking yourself, Mike, does this only work in a bullish market, only when the market is going up? That would be incorrect. If we come over here and we look back on the daily chart, and I just rewound the chart just a little bit, all right? If you look right over here, what do we see? A little ABC pattern on the way down. Let me go ahead and draw this for you. Here's the A to B leg. The B to C leg is a corrective move up, and we project down for D. Well, look right where we came to. We got a little bit of a pop here, then we came and we overshot it, but then we got a nice little pop back up to where? Prior structure right over here before the market ultimately went a little bit lower. Now, are there times where the ABC pattern does not totally complete? And yes, there are. If we look right here, we can also make the case that this was an A to B equals C to D pattern. And I can tell by eyeballing it, we just barely missed hitting that pattern. And that is how it's going to play out sometimes. Not every time are the patterns going to play out, but when we get the big juicy targets on the A to B equals C to D patterns, it gives us a very logical place to not only place our targets, but also look for turning points in the market. Now, sometimes in a strong trending market, the market is going to continue to blow past our targets. But again, it's very important to have a key level on the chart that we're going to be focused on. Now, if you guys like to learn more about volume profiling, the settings I use in TradingView, watch this video right here.